It's Wednesday, August 17. Welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm Michael Casey, filling in today for Christine Lee. Joining me are my co-host, Emily Parker, Executive Director of Global Content, along with Lawrence Lewitton, Managing Editor for Markets. Before we kick this off, let's take a quick look at markets, starting with Bitcoin. So the CoinDesk Bitcoin Price Index, the XBX, is at 23,666. That's down about 1.2% on the day. The CoinDesk Ether Price Index, the ETX, is at 1,868. That's down 1.25% on the day. And the CoinDesk DeFi Select Index, the DFX, is at 167.39, which is off a 3.95%. So bigger loss there. So, guys, I was just thinking, looking at our First Mover coverage today, there was a section in there about various bankruptcy filings that have happened, particularly in Singapore, actually. We saw ZipMex on Monday, and then Hodlnaut, another currency lending outfit, announcing that it was filing for a form of creditor protection via the Singapore High Court. And it just got me thinking, look, really, is this rot over? There was this idea that the leverage cycle was playing itself out. Maybe Three Arrows Capital was the big shoe to drop after, of course, the trigger being Terra. And then, we had some big names, Voyager, Celsius, etc. And things got quiet. But, we're still seeing fallout here. Is there another shoe to drop? What do you think, Lawrence?
Yes. It sounds pretty, kind of like it's kind of flippant, but no, really, it's not the end, because remember, if you have a market that's highly, I don't want to say highly leveraged, but don't forget, it wasn't long ago that there were big advertisements for 100x with your trading, with perpetual futures. And the other thing that we're looking at now, you look at Akala, the USD stablecoin, synthetic algorithmic stablecoin. That's another thing that just had a collapse, and it's now rebounded back to close to $1 peg, because there was a fault in the code. And then, it just tells us a couple of things. First of all, these people are still leveraging. That's why they're using algorithmic stablecoins. They're leveraging using code which no one's checking, and or at least they're not checking close enough to realize, oh, there's a bug that could potentially blow this thing up. And so we're not done yet. We're going to be done when there's more blood on the streets. So, yes, I do think we'll see more of these bankruptcies, and there are probably some that haven't even started yet that are going to happen, because this is a lousy. We have a lot of lousy, setups here, including I want to say algorithmic stablecoins. So. Yeah.
So you're kind of also pointing to this, the disease being part of all of this sort of excess, right? The 100x returns you can get. The idea that the number go up is going to be the defining paradigm of this thing, and therefore you bet and speculate based on that basis. And I think it was interesting that, we were also seeing some bankruptcies in the mining sector, Stronghold Digital Mining, announcing that it's negotiating with lenders over a possible debt restructuring. So not a formal bankruptcy, but possible restructuring. Just because the price of Bitcoin is not just going up, right? It's clearly weighing in on any mining outfit that is facing margins, and that's sort of, to me, is the vicious cycle, right? It's not just lending exposures and risks; it's also the fallout from all of the declines, the big declines we've said. But still, Emily, markets are up a bit, right? We're not feeling quite as horrible as we were, but as Lawrence is pointing out, some sort of shaky news in the stablecoin space, et cetera, et cetera. What's your take?
Exactly. This is a real opportunity for the crypto industry, which has two major problems. One is that there's just a major risk management problem. There's just a sort of vibe in crypto where when things are going well, don't ask too many questions and just roll with it, And then also it tends to be quite reactive. It's okay, regulation by enforcement. Okay, now we're going to have a bankruptcy proceeding, instead of being proactive and coming up with regulation that actually makes sense, and actually having companies, sort of take a more careful look at their balance sheets. So hopefully, yes, you're right. Stable coins are the next frontier. And I think a lot of people think that's the next shoe to drop. So hopefully, before that happens, there'll be some sort of stablecoin regulation in place that will prevent that kind of thing.
Don't hold your breath.
Well, we certainly need, it sounds to me, some sort of, complacency ain't such a great idea ethos to build. But look, let's see where it goes. Shoes to drop. We'll see.